Hello, everyone. My name is Lori Mercaldi. I'm a profit strategist and certified profit first professional at Financial Tally. And today we're diving into how you can build a financially healthy business using the profit first cash flow system. My goal is to give you clarity, confidence, and simple steps you can take right away to strengthen your business finances. And if you haven't heard about Profit First before, it's based on a book by Mike Michalowicz called Profit First. And a few years ago, I was looking to implement a system that would help business owners keep more of what they made. I found every year, particularly during tax time, there was a disconnect between what was actually in their bank account and what was showing on their profit and loss. And they really needed to have cash available to finance their lifestyle. They weren't really doing that the best they could. So I came across this book. I became certified, and then that allowed me to implement this in client businesses. And it's been a game changer for myself and for my own clients. So let's get right into the agenda for today. And today we're going to cover what does it mean to have financial clarity in your business, 4 elements for financial clarity in your business. What is profit first? What should your profit be? What makes a good profit first friendly bank? And then we'll have some closing remarks and takeaways at the end. So I thought this was an interesting statistic, and I'm sure many of you have heard it before, but it's data from the Bureau of Labor Statistics that says 50% of small businesses fail within 5 years. And according to a US bank survey, 82% of the time it was due to poor cash flow management. But wasn't really a lack of passion or anything like that. It was plain cash flow. They ran out of money before they really got up and running. This methodology does help with that. That's why it's important. It's something that can be implemented in your business to help solve that problem. So, just what is financial clarity? When we talk about financial clarity, we're really talking about understanding your numbers in a way that empowers you, not overwhelms you. Clarity means knowing what's happening financially, feeling confident in your decisions, and understanding your path toward your goals. So there's 4 key elements you need for financial clarity in your business. You have to know where you're going and why. Your personal and financial business goals are your compass. You have to have something to work toward. Cash flow management, every dollar that comes in needs a job. You need clean, accurate financials updated at a minimum monthly. If you have an accountant that's just aggregating everything at the end of the year and then doing your taxes, that's not enough to make financial decisions going forward. It's great for doing your tax return and knowing historically where you've been, but it doesn't do a lot to move you forward. Also, you need a strong banking partner, ideally one that is profit first friendly, and we're going to go over some of the qualifications for that help make it more profit first friendly. So you need to know where you're going and why. A lot of times business owners start a business because they have a skill set, but they're not necessarily thinking about what does that business need to provide me and my family and to support my lifestyle. And that's something we go over when we begin working with clients. That's the starting point. The reason you're in business is to create a living for yourself and create financial stability. If you don't start with that first, then it makes things really hard as you go through day to day. And you end up maybe resenting your business because you're working many hours and don't feel like you're getting the incomes you need out of it. What is Profit First? So it's a behavioral based cash management system. You don't have to dig into financial reports every day. You don't have to be an accountant to use the system. By the way, it's not an accounting system, it's putting guardrails on your money. So it doesn't matter what system you use. I know a lot of times people associate it with a particular accounting software, but basically it's guardrails on your money. You can see how healthy your business is by simply looking at your bank account balances. And it helps you to adjust and refine your allocations as your business grows. You're much more likely to go in to look at your bank account to see what you have available as opposed to going through your accounting software and taking a look at your financials at a minimum at a monthly basis. A lot of business owners don't do that until they get to the end of the year, and then they get the tax surprise. So this is just a better way to handle your finances, and it's simpler in its approach. It's not something that you need an accounting degree for. You just simply have to open up your bank app and take a look and see where you are as far as your account levels in each of your bank balances. So the traditional accounting equation is sales minus expenses equal profit. And the problem with that is that you're prioritizing the expense. So profit is treated as an afterthought. And this leads to inconsistent results and sets a revenue target that is more in line with just creating enough revenue to cover your business expenses instead of having the focus on the profit and your owner's pay and your tax savings to pay your tax liability. Whatever you put primary is first, and that's the thing that you tend to focus on. So if you're focusing on the expenses over the profit, that is what you're going to try to get your revenue amount up to. So what profit first does is it flips that equation. Instead, it's sales minus profit equals expenses. Profit always comes first, and the system is proven to create financial stability by ensuring you pay yourself first. You reserve the amount for tax funds that you need to pay your tax liability, and it helps keep your expenses contained because you are putting those last. Whatever is left over, that is what you're using for your operating expenses of your business. So in Profit First, what you do is you divide your money into different Profit First buckets, different bank accounts. So what you have are 4 distinct bank accounts that you use for allocation for your business. All the income comes into one income account, which is not shown here in this slide, but that's what happens. It all comes into an income account, and then from there, you delegate a dollar amount to profit, which is your reward as the business owner. That's your reward for working on the business. Owner's pay is your salary, what you pay yourself consistently, and what that is working in the business. Setting aside money for your tax liability so you don't get that big surprise at the end of the year. That's what the tax account is for. And then the operating expense is whatever's left over to operate your business from. So Profit First creates structure that brings clarity and peace of mind. Your money has a home. Each dollar has a job. You have financial boundaries because you're putting it into specific bank accounts, and those bank accounts are labeled for what they're supposed to be used for. And you can operate your business knowing you're making smart, sustainable decisions. You know where each dollar goes, and you know the job that it has. Whatever goes in that bank account, that's what it's to be used for. You can see here visually how cash flows through your business. And everything that comes in from sales and income is deposited into the income account and then is allocated based on priority to each of the other bank accounts. And you can see by allocating cash to specific bank accounts in the order of priority helps to remove the temptation of overspending and save it where you should be instead of just haphazardly going into one account and taking out money for your personal living or taking out money for a new piece of equipment that you want to purchase. It just keeps the guardrails on, showing what you need to allocate to each account to have a financially healthy and stable business. So with Profit First, what you're doing is you're establishing a cash flow rhythm. So once you establish your Profit First accounts, the next step is to establish a rhythm for managing the cash flow. And here's how that works. Step 1, on a set day, say the 10th and 25th of each month, you'll transfer all the funds that have accumulated in the income account into your other accounts based on your allocation percentages. This ensures that profit, owner's pay, taxes, and expenses are funded intentionally. Step 2 is pay your bills only from your operating expenses. And by keeping this rhythm, you create predictable cash flow. It takes the emotion and uncertainty out of it because you know where each dollar is supposed to go. You no longer are reacting to your bank balance saying, oh, I don't have enough to cover this month. You'll follow a clear and repeatable system that keeps your business steady and your mindset calm. So here's a table that shows the target allocation percentages. This chart is from the book, and Mike did a lot of research about what was considered a healthy business based on different revenue ranges. For example, if your real revenue range is between 0 and 250,000, profit should be 5%, owner's pay 50%, tax 15, and operating expenses are 30%. Now, this isn't where you start. This is a target. Where you start can be completely different. A lot of times I start with businesses that may be 60% in their operating expenses, they may be 85. Then over a period of time, quarter by quarter, we reduce the amount that's in the operating expenses and allocate it to the other accounts. So slowly you build up the amount of profit. A lot of times they won't even have the percentage might be zero. And then we increment it from the operating expenses or wherever else has to be allocated. Most time operating expenses, percentage at a time. Each quarter we increment and each quarter we put an additional amount in there. Might be 1%, might be 2%, depends on how fast they go. What I do caution against is don't start off out of the gate trying to be at these percentages. Take time, do an assessment. An instant assessment is included in the book, and take a look at where you currently are so you're not cutting things out too quickly or moving too quickly. It's better to go slow and keep up with it than come out of the gate running and then give up. So this is an example of an allocation of someone that is between the 0 and 250,000 revenue range. So for example, if this business owner's revenue was $200,000, 5% would be 10,000. Owner's pay would be 50%, which would be 100,000. Tax would be 15%, that's 30,000. And operating expense would be 30%, 60,000. So another way you can look at it is you've got 140,000 that's going to the owner, either through profit, owner's pay, or their tax amount that's set aside that they can use for their estimated tax payments. Like I said, this isn't where you start. You may start out quite a bit different than this, but the idea is to increment it quarterly, make your adjustments 1, 2, 3% from one of the other accounts to eventually get up to these percentages. And those, by the way, are called current allocation percentages. In the book, it explains how you do an instant assessment. There's a chart that you use to see where your business currently is and then compare it to where you want to go. As you get more into it over the quarters and you get used to doing the allocations, then you can make some adjustments. Generally, this is the targets that you should be trying to reach. So some first steps you can take is just open an additional bank account, name it profit, start allocating 1%. It's an amount that you barely notice, but it gets you in the habit of doing the allocations. Start small and build it, like I said, build it over time. Don't come out of the gate trying to hit those targets. Start with where you currently are and then slowly, quarter by quarter, increment it to where you can see a definite difference in your business. So what makes a profit-first friendly bank? The best banks are those without fees. They allow you to open multiple accounts. They let you to transfer between accounts easily. And many credit unions and your local bank, you can ask them, do they have additional fees for opening additional accounts? There's also some great online options. I have one that I use personally and recommend to clients, but there are a few others too that have those available. One thing I'd like to say about the allocation, I know sometimes people have accountants or bookkeepers that say there's a lot of transfers. Why are you opening all these bank accounts? The amount of counting necessary in a month to reconcile the additional bank accounts is minimal because you're just making transfers between these accounts. There's not a lot of other activity other than transfers. And the clarity that you get just having these additional bank accounts more than outweighs any time needed to reconcile additional accounts. So I just want to make that clear that I know sometimes that's an issue. Even if you're doing it yourself, it's really not that big of a deal. There's not that many transactions, just mostly transfers between the bank accounts. So some key takeaways today are your business needs to provide the cash flow needed to sustain the lifestyle you deserve. Please keep that in mind. The reason you're in business is to support yourself and your family and do the things you want. Have retirement, have vacations, have the money set aside. The guilt that is involved when you have to take money out haphazardly, if you have it set aside already for profit and your owner's pay, you deserve to be paid first. That is important, and it's the only way that you can support your own lifestyle. Profit first ensures consistent profit because you're taking the profit out first, you're paying yourself first, and you're funding your tax account. So when tax time comes, you do have the money available, and the pressure of that deadline is virtually gone. I think that's one of the biggest things I've seen from clients is they have their tax money set aside, and when the deadline comes, they already have made their estimated payments, and it's something that helps them sleep a whole lot better at night. Start small. Just start with simple steps you can do. Like I said, open one additional bank account, name it profit, and just start putting in 1%. into a profit account and start right there. It does get easier as time goes on, and especially as you see the changes in your business, you feel a lot more relaxed that you know where the money is, where it's coming from, and where it's going. So I have a couple of resources for you. I have the first two chapters of Profit First available. You can scan that QR code and get those. They're also available on my website. There's a page on my website that does have a place where you can go and download that. Also, I have a handout with a presentation today, and in there is the Profit First Instant Assessment and some definitions and additional information to do your own assessment to see where you currently are. Also, if you have any questions, I do offer a complimentary 30-minute Zoom call. You can scan that QR code. You can go to my website and go to LinkedIn to contact me there. If you have any questions, I hope that this was informative for you and it helped, and have a great day.